When is second better than first? It's when you get a second opinion, of course. When folks come into my office, one of the first things we do is we review their life insurance policies. But let me tell you, less than 50% of all U.S. citizens have life insurance. And I think the most important thing is this life insurance policy right for you? And I have to tell you, many times they don't know why they bought it. The only thing that they do know is that what's coming out of their bank account. I had a situation recently of a gentleman that I met in a networking program, and he asked me to review his life insurance after visiting with him briefly, and he had about 5 years left on his life insurance. I asked him a simple question at the very beginning: do you have the old life insurance or do you have a new life insurance policy? And he asked me why, and we'll go into that later. His life insurance, after 25 years of paying, was going to be null and void. You know, it's like when you lease a car. You pay out all this money, and then when the lease is up, you don't own the car anymore. And it's the same way on your life insurance. He's betting with cheaper dollars that he's going to be able, he's going to pass away and his family's going to get those dollars. But if he lives 1 day, 1 week, 1 month beyond that, they don't get any money. So he asked me to evaluate what he's got, and if I was his brother, because we weren't far off in age, what would I be telling my brother? And after review, I told him it's better that he gets a new policy. This way, instead of 5 years of coverage, we were able to carry it out another 30 years for him. So that protected him because people are living longer today. And with that in mind, I'd like to show you a cover of Time magazine. It shows a beautiful baby. Isn't she gorgeous? And it says this baby could live to 142 years of age. And now, folks, with modern medicine, you too could live a lot longer than you had planned to live. So here's what you need to know: the difference between old insurance and the new insurance. In the old insurance, actuarial tables, they didn't plan for people to live as long, just like Social Security for your grandparents and mine. Today, people are living longer. Some people say it's 1 in 4 will live to 90 and 1 in 10 could live to 100. My God. What about long-term care? In the new plans, there is a component many times that have long-term care opportunities that you can convert your life insurance to be able to cover those needs. When I talk to people, I find out about their mortgage as an example. I can't tell you how many people who are 50 and 60-year-olds are going out and getting 30-year-old mortgages. They either refinance or they're buying a new home. I don't know, really, no offense, what they're thinking, because if something should happen to them, there's no lease on life how long we're going to live. And that puts the burden on the widow or the widower, or in many cases, even the children. How long do you want to keep your family in that house? You don't want to go back to 2008? Well, let's think a moment. 2008, stock market crash, and what happened to real estate? Real estate was on its lowest point. And if you're forced to sell your real estate at a time that you don't want to sell it, you need to make a preparation to make sure that you keep your family in there. At least enough time that they can eventually sell it. Maybe in the back of your mind, you're wondering, what does my mortgage have to do? What does me going into a nursing home or going into the hospital, how does that affect my family? In a big way. Because if you don't have some set of assets that can cover any calamity, insurance is the best thing, because you're buying pennies on a dollar to cover you for your family. If you like this episode and like to talk with us about your portfolio, give us a call at the number below. We'd love to help.